So in today's video, we're going to be taking a look at my dividend portfolio titled Dividend Dates. We're going to be taking a look and seeing how the portfolio has been performing, how some of the stocks individually have been doing, as well as, talking, of course, about dividends, seeing as we are a dividend, portfolio here. This, of course, is M1 Finance, which is what I use on a regular basis, building up my dividend portfolio. We're going to talk more about M1 Finance and, of course, how everything is going here. But before we really do that, if you guys are somebody who has some student loans that needs to potentially refinance, check out my friends here at Earnest. They are a company that helps people lower their interest rates for student loans, which means that can save you a lot of money. That money you can use to pay off debt or even invest more into the stock market like I personally love to do. Now, check them out. It just takes about a couple of minutes to go ahead and plug in your information and see if you can get your lower rates. A link will be in the show notes down below. That does help support out this channel and also gives you a nice little bonus. All right, so let's go ahead and hop back into my portfolio here and kind of just take a brief look and see how we did over the last couple of days and weeks. So you can see here, my current portfolio is sitting at $16,817. Now, currently over the last day since this recording, of course, we are down $86, so not a big worry there. We can go for the last week. We can see here we are actually up $35.97. So a decent week there. Obviously not huge percentages increase, but still good. And then we can see over the last month, we've actually gained over $705 on this portfolio, which is fantastic. Now, I don't worry about the return percentage here. I personally don't really care for that. All I like to care about is the actual gains over here. This is money weighted returns, which means if I earn dividends or, made profits and all that, that is going to stick in there. And I'll show you guys here my unrealized gains too, for those that maybe care about that. So we're going to also go here in the last quarter. We're going to see here in the last quarter, we're actually up at $984.58 on the total gains. But if we look here on this nice little chart that says value over time, we can see here a quarter, like last quarter, or I guess I can say a quarter ago, we were at $11,155.35. Like, holy smokes, like that's a huge increase in just 3 months time. So I'm really happy about that so far. You can see we had some up and downs. We had a little bit of a slowdown in the end of October. And then let's go ahead and see where we're at for the year. So for the year, we're up $2,329. And again, check this out. A year ago, we were sitting at $930 in this account. Now, I always like to preface that, this account that I have, I'm building over time, and it didn't happen, instantaneously. You can see here, I was, within 900 to, 1900 for quite a long time. So it took a long time to build up to that. And then you could just see here over time, I got more comfortable. I felt more confident in what I was doing. And then I started investing more, and that's how I am building this up. And in my all-time, not big changes there, but again, you can see here I started on January 23rd of 2019. So getting close to a 2-year marker here, but started with $100 in this portfolio. And that's a big deal for me. And I think a lot of people as well too, because usually when people are getting started, they have very little to invest, and that's okay. Like, don't take that as a bad thing. That just means you are getting started as if you're putting your money in and just having it work for you as you can keep building. We could see here the unrealized gains currently are at $1,811, which is 12% gain. So that is fantastic. And what's really cool too, and like we were talking about earlier, just investing what you can is really important. You see all these shares that I own with these companies. These are all in fractional shares because M1 Finance, which is the platform I personally use to invest in, uses fractional shares. So I love fractional shares because I can buy into these companies in small dollar amounts and build up over time. So that way I'm not sitting here having to spend, $150 on, Apple, or $200 on Microsoft, whatever the case may be, just because, I had to build up to that full dollar amount. I can buy in small increments, and that makes a huge difference. I'll show you guys here in the activities feed kind of what we purchased over the last couple of days. We did a super small deposit right over here. You can see it was a total buy of $22.32. I bought a tiny bit into Costco, $6 worth, even though their share price is $383. This bought me 1.5 shares, 1.5 shares, 1.5% shares of one stock. So not a lot of, percentage, but you know, hey, $6 is going to go a long way over the course of time. Then we can see here, Next Era Energy, I put in $6.32, and then Johnson & Johnson, I put in $10. Now, I did these for different reasons. J&J was having their ex-dividend date coming up really soon. We can bring up that and check it out. Next Era, I think, was also having their ex-dividend date. And then Costco, if you watched my previous video, I talked about how Costco has a special dividend that is going to be paid out on December 11th, I believe it is. And they're paying out a $10 per share special dividend. I was just buying a little extra into it because I kind of wanted to for fun. But that's why sometimes I buy in small increments is because of like the dividends that are going to be coming up on ex-dividend dates, which, just in case you're not too familiar with that, let's kind of go here as an example. So Johnson & Johnson, which by the way, this is a website called seekingalpha.com. Not affiliated with them, but I do enjoy using them for all my dividend needs and information. So right over here, you can see companies that pay out dividends have this thing called ex-dividend dates. And so if you're not familiar with what this is essentially the day that you cannot buy the stock anymore and get the dividend. So if you want to get into Johnson & Johnson to get the dividend, or you own stock and you want to get more of it before this date, you will have ownership as long as you hold it through the record date, which is right here, which is the 24th of November. So ex-dividend date, you cannot buy into this and get the dividend anymore if you buy on the 23rd and beyond. But anything you've owned from the 22nd or prior to that, which the 22nd is a Sunday, so that wouldn't have mattered anyway. But anything prior to that, as long as you hold it till the 24th, you will get paid out on this payout date, which is December 8th of 2020. And this is the amount you get paid out per share. Now, the cool thing is, if you are somebody like myself who owns fractional shares, which I'll show you here, let's go into our health sector really quick. So I own Johnson & Johnson, and you can see right over here, I have 2.395 shares. So I'm going to get, $1.01 per share. That does work in fractional pieces. So if I actually, let me see here, because the ex-dividend date hasn't come up yet. So technically speaking on that end, let me go ahead and bring out my calculator just to show you an example. So I get $1.01 per share. So if I times that by 2.39505, I'm going to get paid out $2.42 pretty much on that front. So the cool thing is with fractional shares is I have the option to be able to, or not option, I get the benefit of having fractional dividends as well, which is really cool. That just helps build up that portfolio faster, even with smaller dollar amounts. So that's what I sometimes pay attention to. So when I placed that order a couple days ago for that $20 or so, that was, to get into Johnson & Johnson a little bit more, as well as the other two stocks. Now, I also did a trade on the 20th. 14 buys. You can see this one is 200. Normally I do these on Mondays. I just decided to do this on the Friday, I believe it was. Was that Friday? Yeah, that was Friday. So I did this on Friday instead of Monday, which is fine. Sometimes I decide to do that. No real rhyme or reason, to be honest. At times, sometimes I just want to get that money in there faster. Even if the market drops a little bit, it's not the biggest worry for me. So you can see here I did like Lockheed Martin for 10, P&G for 12. Another 15 for Johnson & Johnson, 22 for Next Era Energy, 13 for Pepsi, 10 for Aflac, pretty much $8 for Google, 25 for Microsoft, 20 for Home Depot. I'm loving Home Depot right now because the stock has gone down for a little bit, and we'll actually break into that here in a little bit. DLR for $10, pretty much $20 for Amazon, 15 for my ETF, which is VOO. That stands for the Vanguard S&P 500 Growth Fund. Then we also did another 12 for Realty Income, and then we did another $8 for Tesla. So obviously a lot of these are dividend companies, are dividend paying companies, which I love. Obviously, that's my favorite thing about investing is dividends. I do know that there's growth, and growth is important, which is why I have growth in this sector over here for my overall portfolio. But let's go ahead and jump into our retail over here and kind of look at Home Depot for a second, because I might be buying a little bit more into Home Depot maybe over the next week or two. So we can see over here, just for my own sake right here, you can see my total gains is negative $30 and my return percentage is 5.36%. And then if we go to the quarter, it's still technically down. And I think for the year, we're still way up. So if you look at it just from a month perspective, if we go break in here, that means I have some really good opportunity to buy more into Home Depot to get those really good returns if the price has gone down for a little bit. So my average share price is $253.01, and then the market price right now is $269.81. So I have about 2.21 shares, and I want to of course keep building up. This is actually the largest holding in my retail sector, and it's the largest percentage that I have as far as a target. So I of course want to keep increasing this. You can see their PE ratio is really great at 23.22. And then their dividend yield is currently at 2.17%. Now, if you are potentially building up to a dividend investor, you might see that as a really low percentage, and it kind of is, right? 2.17% is not a lot. But what I want to do is hop back over here into seekingalpha.com, and I'm going to bring up my portfolio that I put all my stocks in here, and we're going to go to Home Depot. So I'm going to show you this right here. So if we go to Home Depot, this is the current, page right here. It kind of goes over all the information. If we go for the last month, you can see that, just like we saw in my portfolio, it's down about 5.6%. So for me, I'm just like, hey, if they're down 5% and, eventually they're going to get back up to their 52-week high or wherever they were before, that's me buying at a 5.67% discount. That's how I personally see that. If you look at the last, 6 months, it's obviously been up. So it's just kind of having, kind of like a flat line, a little bit of a downturn in the last month. So great opportunity. If it keeps going down, I'm just going to keep on buying. But this is what I want to kind of show you. So here's our dividend page for Home Depot. So currently the yield is actually closer to 2.22% right now, which is a $6 annual payout. That's huge. That's a lot of money. But of course, they are pretty expensive. We saw that at $269. That's pretty costly to be able to buy into. Cool thing is the fractional shares once again allow you to get into them. Speaking of which, because I use M1 Finance, if you guys are also interested in checking them out to be able to buy fractional shares and build up your dividend portfolio, check out the link in the show notes as well for you. That does help support out the channel as well if you want to get started with them. And if you have questions on M1, leave them in the comments here. I will link you up to my other YouTube channel where I go into great detail on a lot of different tutorials for the platform because I love it a lot. So what we're going to do is actually look at our 5-year growth rate. So on average right now in the last 5 years, Home Depot has increased their dividend by 23%, which is a lot. So what I'm going to do is go into where it says dividend news right over here. And I'm just going to give you an example of this. This is probably my favorite thing. If you've been following along, you know that this is probably my favorite thing when it comes to investing. So Home Depot back in February of 2020 announced that they were going to start paying all of their shareholders $1.50 a quarter, which previously they were paying $1.36. That's a 10% increase, lower than their 5-year average, but when considering everything that was going on, that was like right when everything was kind of dropping in the market. But 10%, that's like a raise for people. Like if you were having ownership in Home Depot, that's a 10% raise that you just got for doing absolutely nothing, and you're just making more money, which is something I've been getting because of that rate increase. But what I want to show you too is the yields. So yield on cost right over here. In case you're not familiar, this is essentially how much you're making percentage-wise based off of the cost that you paid. So let me actually go back to the 5 years. Actually, let me go back to 1 year just to kind of make this easier. So this chart is kind of backwards, just so you kind of know this. This is a year ago over here on the right-hand side, and this is like current year-to-date at the moment. So what we're going to do is look. So like right now, as we saw on the main page, if you bought into Home Depot right now at the current price point of $269, your yield is 2.22%. And so that just means that that's how much of a yield you're getting for the cost that you paid into the stock. But the stock price goes up and down. The yield increases most of the time. With Home Depot, it does. But what we can do is we can actually backtrack, right? So since we're in the 1 year marker, we can backtrack to February timeframe when the market was dropping like a rock. Well, technically February, March. So you can see here, Home Depot at one point dropped all the way down to $152.15 per share. So that's how much it costs, because obviously the whole market dropped. If you bought in that moment, that means your yield was almost 4%, right? So right now, that means you would be getting 4% on your money every single time because you bought at a certain price point. And now that the price has gone back up, you are getting less of a return on your dividends because it's more expensive to buy it. Now, if we jump to the 5 years, now we're going to start scrolling back. So if you see this percentage, it's kind of like going up and down, up and down. So if you bought this stock 5 years ago to the date, let me get kind of like as close as possible. So 5 years ago, so right here, so the cost 5 years ago was $130.21. Your yield would have been 4.61% with all the increases that were going on as well. That's really good if you consider the fact that if you bought it, in 2015, obviously, the price of the stock has gone up significantly, but then that yield has kept increasing as well, which means your money becomes even more valuable at that point of purchase because you are still getting all those increases per year, even though you haven't bought any more. If you didn't buy any more, or if you are buying more, that still works too. The initial purchase with whatever you spent that $130 for has gone to yield you 4.61%. I hope that makes sense. I'm going to jump this back a little bit more. I'm going to go to 10 years now. This is crazy here. So 10 years ago, if in 2010, November 24th, 2010, the average cost right here for a share was $31.16. Now, a lot of times that's maybe because they did stock splits and other stuff, and we can talk about that in the future. But right over here, if in 2010 you bought stock, which first of all, just buying the stock at $31 and it being $269 now, that's huge. That's a lot of growth right there for you. But look at that yield, 19.26%. So that means if you bought at least just one share of Home Depot back then, right, you are getting almost 20% on your money. Because remember, if you have one share and you didn't do anything different for all of these 10 years, you didn't buy any more shares, you didn't do anything else, you would still be getting paid that $6 that they're paying out right now, but you didn't have to pay in at the price that people are doing today, which is at $269. So that's how you're getting that yield so high at 19.41%. Can you just imagine if you can go back in time and buy Home Depot stock at this point right over here? Or heck, I mean, technically this is even better, but I don't, those are just kind of a little bit differences right there between all those. But right over here, 10 years ago, can you just imagine that? That's crazy to me. Let's go ahead and go to 20 years to see. So 20 years is not as good because you can see there's obviously been maybe some ups and downs, but there was at one point almost 28%, well actually almost 29% I should say, back in 2003. And you can see it goes up and down. Maybe they didn't have as many increases or as large of an increase as they have before. So for me, this is what I love. I can only imagine getting 20% of my money, once, the increases come in, once I am building up my portfolio to large amounts. That's the goal. That's what people don't talk about when it comes to dividend increases, or sorry, dividends in general, are these increases. Obviously buying today, you're getting a very low yield because of the cost of, having one share. But if you keep holding on to it, imagine if in 10 years, this also happens again. It's obviously no guarantee, but imagine if this happens again in another 10 years. That just means that, hopefully the stock price has gone up. Hopefully the yield is constantly increasing. So then that way your money just keeps going up for doing no extra work. And that's what I love. So I definitely see some value in Home Depot today, obviously. So I'll probably be buying more into them. As you saw that last purchase I did, I put in, I think it was $20, right? See, yeah, $20. So I put in $20, which is not a lot of money, obviously, but in $200, that's 10% of that deposit there. So it's gotten a good chunk of the overall amount. And then my retail is 10% of my portfolio anyways, and Home Depot is 36% of that, or at least that's the target. So it's a large percentage of it. And then you can see here, I got some other stocks in the retail sector as well, but pretty happy with Home Depot and wanting to buy into them over the next month if things kind of stay consistent as far as them being a little bit more flatlined, I could say. Let's see here. So yeah, you can see their value has kind of just gone up, mostly because I've been putting money in. I've added in $134.74 just in the last month alone into this portfolio stock itself. So just into Home Depot, I've added $134. The market has still gone $30 down since I've been adding more anyways. So it just means that I'm getting more opportunity to constantly be buying at a lower price point, which is what I want to do. I don't want to be paying high prices for the stocks that I want when I have the opportunity to buy them at a much better price point. So that's my focus when it comes to looking at which stocks I want to purchase more into. Like if we look, for example, too, because we're in the 1 month target, right? We're down that 30% on Home Depot, but if we look at the rest of these, Costco, I'm only up $3.59 on the returns for this one. But then you look at Ross, I'm up almost $60 on Ross and almost $30 on Starbucks. So, why would I want to buy into Ross more than Home Depot if, Home Depot is the one that's down and Ross is doing stellar right now. So Ross right now is trading for almost $109, and my average is $89. So it's had some amazing growth just over the last month. And so for me, I'm going to say, hey, I'm going to slow down. I'm not going to buy anymore right now just because I don't see the value in it. But when it's gone down or like it's not doing so hot, then I'm going to go ahead and buy some more. Because I think Ross actually had some bad weeks. Where was it? Maybe it was right there. It was in October. So if I scroll back in, so you can see in October, just my overall value in this went from $335 all the way down to $299, but it quickly shot back up. So you could barely even see it here in the timeline, just because it's gone down and up very quickly. So it did like a V-shaped recovery. But I believe in that time frame, I bought some more, if I'm not mistaken. So that was October. Let me see if I can check that out really quick here. So Ross, and let's see. So I did buy in November, put an extra $10, but you can see in October the 23rd I put in 10, October 19th I put in 10, October 16th I put in 383. Not a lot, but you could see that. And then between the 21st of September and the 16th, I didn't do anything else. But because I saw that market go down, I bought some more. I don't remember why I bought on the 16th. It might have just been automatic with my deposits, but overall you could see that that's what I saw. I saw the opportunity right over here when the market was going down, so I bought into it. Now I think it kept going down just a little bit afterwards, but I had some other better opportunities to constantly buy into. Obviously hindsight's 2020. If I knew better, I would have bought more into Ross, knowing that they were going to go up, but I didn't know that. Obviously, it's always hard to judge based off of where you think things are going to go, but it's all right. I think overall, we're obviously still doing very well. Up almost, what was our lifetime on this account? Almost $2,400 in total gains, which is, again, profits, dividends, and everything else. You can see here, earned dividends has been $162 in this account. Some of that hasn't deposited yet, so I don't count that all. I do have a dividend tracker where I actually keep track of how much I actually have made across the board. But if we keep going, sticking to the 1 month so far, you can see my growth has done very well. Up $175. My financials has been killing it right here at 222. Just in case you're curious what I got in here and what's kind of performing very well. We got Aflac right here. I have gained just in the last month $113. Discover Financials up almost $88, and you look at these percentages, they're doing pretty well there. Ally right over here, not doing as hot as these other ones here, but still in the positive at $10.06, which is about 3%. And then Visa's been very lackluster just over the last little while here. So they've only been up $10.43. And I say only because these two have obviously up at the top here. Well, make a little side smiley. Have been doing well. These ones in comparison have not, but are still obviously positive for the last month, because 3% increase for the last month is not too shabby for these financial sector funds, but obviously when you're comparing the other ones at 20%, it'd be nice if they were all there. So so that one's doing pretty well. Retail's obviously about 4%. Real estate has actually taken quite a bit of a hit in comparison to some of the others. But the Vanguard VOOG fund has been down a little bit in comparison to the rest. So this one's up $32. And then you can see here, my health has actually gone up. And this is a lot to do with, I believe it was, AbbVie right over here. Has gone up 20% at $53. Pfizer had a nice little run there for a little bit. Let me see, where was that? If I go to quarter, no. I guess it's kind of like recovered again because they announced the whole thing with the vaccine stuff. And so it like skyrocketed for a little bit. You can see right over here, it just like skyrocketed and then it just started coming back down. Maybe I should have sold, but I'm long term, so I'm not somebody who just sells at one point to get back in for the most part. I'm more of just, if the market goes down, I'll buy more. If it goes up, I'll slow down on my purchase unless I see some big opportunities. The one company that I mainly purchase on, even if they're still going up, is typically Tesla. So you can see here with Tesla, just in the last month is up $137, which is amazing, 16%. But I'll buy into them whether they are, going up or if they are on a downward trend, just because I believe in the company. I think they're going to do amazing things, considering that their market cap isn't even $1 trillion yet. Obviously, there's only, 3 companies that are over $1 trillion market cap. I believe it's 3. Let me double check really quick. So we have 4 companies. So we have Apple, Microsoft, Amazon, and Google. Obviously, Facebook is not too far behind. And then we have just a few more companies that Tesla is going to surpass. So Tesla is actually larger in a market cap than Walmart. That's pretty intense. So anyways, going back to this, I'll be, where's the growth? I'll be buying into Tesla regardless if it's up or down, just because I believe in the company. So we could see here in the last month as well, Amazon has actually been down for us on this portfolio. And then Facebook hasn't really done much. It's obviously pretty much flatlined over the last month. So these are also 2 great opportunities for me to purchase. And this is why it's important when anybody talks about what they're buying over the next month to kind of consider, well, that's based off of their performance on their stocks, right? Because what I decide to purchase over the next month is very largely based on the stocks that I have and how they're doing. I don't really often add new companies to my portfolio. If we go to my holdings, you can see right over here, I actually have 28 positions, which honestly, even for me, might be a little bit too much. I might actually lower this a tiny bit here, maybe to like 25 in the future. But right now, this is my whole portfolio, all the way from Apple down to Pfizer. So those are the different stocks that I own, but I have to be very cautious with, where do I want to put my money? How do I want it to grow? And when I decide what I'm going to buy over the next month, it is mainly based off of the performance, because I can go to unrealized gains. Let me click on this again and go one more time. So I can see which companies are not performing very well on the unrealized side as well as the money weighted side that you saw earlier. So something like Lockheed Martin is actually, I covered it up there, but it's like $5.80 that I'm down on overall unrealized. And then AT&T, I'm down about $45 unrealized as well. And then you can see a couple other companies like this one right here, DLR. I'm only up 85 cents unrealized. So that means that this stock has gone down significantly. So I'm going to actually close this off and go in here. So I'll show you here. So I saw that as an opportunity. So if I go into my real estate, DLR stands for Digital Realty Trust. So this one over here, what I did was I saw that it was getting very close to my average share price. So then I decided to go ahead and just start buying more in. So if we go to the last month, you can see, so I had a nice dip over here in my overall value, and then I just started depositing quite a bit of money. So you can see here, net cash flow over the last month has been $91, and I'm actually still down $26 on this account. Now, this right over here does take into account money weighted returns. If we go into like the last quarter, you can see the dividends right over here, the market gains or technically market losses, and then added together. So from 22.11 plus positive $1.95 puts me at a total gain of negative 2016 because the dividends are considered a money weighted return, so they're added to your total because you still made money because you own the stock. So for me, I'm obviously down on this currently, but I'm okay with that for, well, the last quarter I'm down. But, you know, in my all-time, I have market gains of 92 cents, but then I have earned dividends of $3.34, putting me at a total net gain of $4.26. So still happy with this portfolio, or not this portfolio, sorry. Still really happy with this stock, but obviously I'm going to be buying more into them just because of the opportunity. So let's go ahead and see what I did over the last little while. DLR. Right over here, so you can see I did a lot of purchases in November so far. So we can see on the 20th, 17th, 16th, the 13th, and the 10th as well. Before that, obviously there was a little bit of a time split from the 10th of November from the October 30th purchase, and then a couple more purchases you saw in here in October too. But that's how sometimes I make those decisions, is just kind of making sure that I have the opportunity. And obviously, you know, with DLR here, I definitely put in, you know, 14, 5, 10, 7, 10, decent amounts every single time. And, you know, here's a cool thing too. So let's see here. So on the 16th, when I bought into them, the share price was $141.50. And then if I go to the 17th, $142.37. So obviously the stock went up. And then here it's at 143. So I got a chance to buy at least twice before the market has gone back up for this stock. But if we go into the 13th, 142.66. So here's a great example. So I bought this on the 13th for $142, let's just say. And then on the 16th, it went down to 141. So when it went down, I wasn't worried or felt like, you know, oh, I got cheated out because I bought on this day, but then it went down even more by the 16th. No, I just bought more. That's all I did. I saw the stock went down even more, so I was like, hey, why not keep buying? And it went back up by the time I did the next trade day, you know, the 17th, and that's fine. It went up, and then it went up again on the 20th, and I still bought. So it doesn't matter whether I buy when it's up or down, I just buy. Because to me, that's what's important, is just buying into it because I'm in it for the long term. And for me, that's the important part. Obviously, I care about dividends. I care about the capital growth as well, because I do want all of that encompassed together. In case you don't know, one of my big goals is to reach over $1,000 every single month in paid dividends. Obviously, if you are interested in getting paid out dividends like that as well too, make sure you hit that subscribe button down below, because that's where we're going to talk about this stuff, is on this channel. We're going to talk about, you know, building up this dividend portfolio, talking about the dividend yield that, you know, nobody else talks about, like we talked with Home Depot. You know, imagine getting that 20% on your money now because you invested 10 years ago. That's huge. So, you know, make sure you hit the like button, because it does go a very long way for the channel as well too, and it really helps the algorithm. You know, find other, you know, dividend investors like yourself and myself to, you know, kind of collaborate and hang out and talk to each other, because one of the biggest things, and one of the reasons I love this channel and my, you know, other tutorial channel, is that I get to talk to people about dividends, right? And there's nobody else around me that loves talking about dividends the way, you know, people in my, you know, comment section love to talk about them. People in my Facebook group like to talk about them, because, you know, it's hard to find those people that are as passionate as we are. So for me, I'm all about building those dividends. I'm all about, you know, having those conversations with people as well. I love, you know, just looking at this right here, right? Just seeing all these dividends. This is all mine right over here. All these dividends getting paid out. I gotta close that up there. But, you know, you can see like Hasbro paid me, you know, Ally paid me, Costco paid me. Like these things just, like, it makes me excited about constantly investing. Now, I know there's people that don't like dividends, that care just about the growth, and that's great. But I'm in it for long term. I'm in it for building, you know, again, that $1,000 every single month. So, you know, make sure you're following along. And if you want to keep on learning, I want you to check out this next video right over here, so you can, you know, follow the journey, follow along with what I'm doing. So maybe that can help you and your journey as well. My name is Dennis, and I will see you in that next video.